Ron. And I'm curious if you could maybe give us a little bit of a sense here as to challenges that Tesla is facing, because despite the price cuts, we're still seeing, I guess, some degree of support when it comes to total volume of units delivered.
Yeah, volumes have been resilient this year, but I think the important context is that at least second half of this year versus second half of last year, pricing is approximately 20% lower to drive that volume growth. You mentioned China and lead-in. I think that's where we first started seeing the issues, and you've seen pretty consistent share losses, at least over the last several quarters, despite the price cuts to BYD and more recently GAC in the Chinese market. And US and Europe, at least, we haven't seen the same magnitude of share declines. The third quarter, there was a bit of a noise because of production cuts, but the real issue in US and Europe has been the trajectory of negative pricing, and I think the durability of that negative pricing has been really surprising, I think, to a lot of investors.
Do you think this is something specific to Tesla or to the broader EV space in general?
I think it's unique to the EV space, because we've obviously seen in the US that legacy ICE manufacturers have had stable pricing this year. Whether it's unique to Tesla, I think in China it's not. We've seen most of the manufacturers in China have to cut price, and it's been a game of absorbing production capacity in China. The rest of the world, it's a bit harder to say if it's just a Tesla issue or if it's broader. But I think in China it's a market issue. In the rest of the world, Tesla is the share leader in EV manufacturing. So I think it's fair to say it's both Tesla and an EV manufacturing issue.
And Ron, I want to talk a little bit more about Tesla's margins and those price cuts, because you write out in your notes that auto gross margins ex credits, that's something to watch here. And of course, the conversation coming out of those price cuts is what it's going to mean for Tesla's margins. What's your expectation?
Yeah, we're at 17.1 this quarter. This is always kind of the most tracked line item when Tesla reports earnings. It's a sign of kind of the durability of their profitability as they grow units. I believe Bloomberg consensus is around 17.8 right now. We see downside driven primarily by factory downtimes to lower fixed cost absorption. Price cuts intra-quarter, that's mostly in the form of discounted inventory as opposed to explicit price cuts, and then also some negative mix from lower S and X volume. But we feel pretty confident in seeing downside to consensus numbers this quarter.
Yeah, 17.7 is the estimate for those automotive gross margin ex credit figures. So obviously you're coming a bit below that. Let's talk about what else we could hear tomorrow out of Tesla. Of course, there's a lot of speculation about when we're going to get the first deliveries of the Cybertruck. Are you expecting any meaningful update on that front?
Yeah, I think at this point, us and most investors are expecting a pretty formal update on Cybertruck deliveries, given that the company said they would deliver a certain number, they would start deliveries in 2023. So our expectation is the deliveries start in November. We see a relatively modest amount of deliveries this year, but Tesla has worked as a stock around new product cycles. So that is one of the bull thesis points. I think our view on the Cybertruck is the ultimate TAM for the Cybertruck, given where we think it's going to be priced, which is north of $60,000, is quite a bit smaller than the bulls currently think.